What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you're having a wonderful day. We had some great trades today, and I'm going to be talking to you about the fibs and walking you through everything. All right. So if you're ready, let's step into the war zone. So first and foremost, why don't you let me know where you're tuning in from today? Let me throw some of your names up on the screen, show you some love, and then we'll get right into the lesson. So who do we have in the building today? So while you guys are commenting there, let me just go ahead and draw one line for our reference today, which is going to be Friday's low. And I'm going to put that in yellow. All right. Because Friday's low, which was back over here, is very key for our trading going into today, because that's going to let us know how we want to trade. All right. And also hit me with a 1 if you got my audio good, and also if you can see everything well, because I just moved over my setup here. And I just want to make sure we're good to go. So we have Handsome Dan in the building. What's going on, brother? Good to see you. Adriana, what's going on? Mitchell, what's going on? Roop, Bad Indie in the building. Mr. Lay, what's going on? STK in the building. Ramon in the building. What's going on, brother? One Cap, what's going on? Margie, Origin, what's going on? Suzuki in the building. All right. Okay, here we go. All right. So the first thing that we have to understand is where we are opening. So you could see that we had a gap down this morning. And anytime we have a gap, especially one that opens below the previous day's low, I'm going to start off with an opening range breakout. So you could see the first trade that we took today, guys, was an opening range breakout, and we got stopped out right away. But thankfully, we were able to get back in using the fibs, and we made back our loser. But let me just walk you through this opening range breakout, because I think it's very important. So again, first candle comes in. All right, let me go to the commentary and I'll walk you through that. So we started off right here, 1 minute to close, we went short. Okay, and then right away, guys, within 3 minutes, we got stopped out. Okay, so watch this now. We turned back, bam, stopped out. So we went all the way, stop hunted, and then turned around. But this right here, guys, was so important to me, because if you look at this high on this candle, it was exactly 445 to the penny. Okay, so let me move this down. It was 445 to the penny. And that gave me a lot of confidence that there's going to be algos in this, because whenever you see a whole level like 445 or 446 or whatever being held, that shows you that there's probably a robot there that's trading that. Okay, because as soon as it touched 445, if you look at this candle, it was just immediately reversed. Okay, so hit me with the 3 if you can see that. So we had that immediate rejection at 445. And once that came in, I knew that I got stop hunted in the morning. I knew that I got stop hunted because we reversed and they took my stop out and then they flipped. But you'll see how we were able to get back in right after that. But that was a powerful sign for me right there to understand what's going on in this market. So the next play that we had right here was this outside bar. So I started shorting once this outside bar broke, and then I added one more time using this Fibonacci. So this is the morning leg Fibonacci. This is the one that I talk about in my book. So you could clearly see in the morning we had this roof at 445. And then if you go all the way down to this low at 442.89, we had a roof and a floor. So we're going to go ahead and take the fib, put it on the roof, and then bring it down to the floor, and we shorted on the 618. So we had an order waiting on the 618, and we got short right there. So let me just show you guys through. So here we go. So morning like Fibonacci, adding to my short on the 618 here. Last play. The reason I said last play, guys, is because if this trade was a loser, that means I would have lost 3 trades on the day. And 3 strikes and you're out. That's my philosophy. I don't like to lose more than 3 times in a row. That means that I'm probably over trading. So the fib, I trusted the fib. We got in here on the 618, and then we started to immediately roll over. So I started taking targets on the 50, the 382. Each one of these fib levels, I started taking some targets, and then we started to chop for a while, guys. We started to chop. And then once this outside bar came in here, I knew that we were gonna be good, because we tried multiple times to break into new highs and we couldn't. And we also had the 786 Fibonacci, which really stepped in big. And then there we go, boom, there was our breakdown. Okay, and if I fast forward it here, guys, let me hit the auto right there. let me just fast forward there. Boom. So there was our short all the way at the high of the day. Okay, so there we go. So that was a really, really nice play. And that was the only other play we took with that short on the 618. The 0 days to expire, the puts went for well over 100%. We got about 86% on this move down. And we also took this exact trade in the small account challenge right here. So this is the small account challenge day 56. My little brother trades this, and you could see went short on the 618 and the 786. So he was, imagine how you feel when you go short on the 786 and it touches it to the penny. I mean, that's a great feeling. And then you could see over here the profit, $578.16. Okay, so covered 6 MES contracts right there. So that was a small account challenge. And that was also on the main challenge right there. Okay, and then the last play right here, just to sum up the fibs, is we had this afternoon leg. So if we take the Fibonacci from the high to the low in the afternoon, which is right here, you could see we had this big time rejection near the 50. But what made this an even better pattern here was we had a nirvana. So anytime you have a trading wars pattern with the fib, those are always going to be a lot more powerful. So we had the nirvana that took us into the close. All right. So hit me with a 1 if you guys followed me there so far. Hit me with a 1. Okay. So I was a little bit worried. I'm not going to lie. I was a little bit worried, but I trust in the fibs and we got that rollover and it just turned into a beautiful day. It was definitely a little bit hard in the morning. You can just look at this price action. There's a lot of chop back and forth. So, it's hard, but if you have the fibs on your chart there, you're good to go because you know where your stop loss is. And like I said, once we tagged 445 here and we just turned around immediately, I knew that this market wants to go lower with that price action. Okay. All right. So SPY, that was SPY, really good. And then here, Facebook, Meta Platforms. I want to show you guys this because this was pretty amazing for me today. So I made about $800 on Facebook. Let me just pull that up right now. Pull that up. So right here, so $785 on Facebook. So let me just show you how we did this one here. So trade plan, bonus picks. So for Facebook, our short entry was 220.54. So let me just show you this now, guys. You're going to be like, what? This is crazy, but this is crazy. So 220.54. All right. So man, when this trade worked, I almost had a heart attack. But essentially, this is what people ask me a lot. So Rich, what happens when we gap down, we gap above, below the trigger? What do? I leave the trigger open. I always leave the trigger open in case we retest. And in today, guys, we pulled back in. The high was 220.61. So we came right back into our entry. We got short right here on the yellow line, guys. And then we covered on this new low down here. This was a beautiful, beautiful trade that we had in the stock room today. So that one was really, really nice. I wanted to show with you guys. That's what you do when you have a trigger and it gaps and you want to get back in. Then you just leave your entry there and then it can fill you on a retest. All right. So hit me with a 10 if you guys followed me there. Let me take a sip of this pineapple juice. I got some fresh pineapple juice. I'm taking a sip right now. No Hennessy inside this. Just juice. Yeah, Nell. So this trade right here, I made 4 times my money. Okay. So I risked about $200 and I made $800. So whatever your risk is, you can make 4 times. That's what I did on this trade. So if you risk 100, you could make 400. You 200, you make 800. So I risked 200 and I made 800. If I risked $1,000 on this trade, I would have made 4,000. So it's 4 times my money. Yeah. How do you draw the fib for the gap down situation? Let's go back to SPY. Generally, what I like to do with the gap down situation with the fib is there's your morning leg, right? If you want to use a gap on the fib, then you take the low of the last bar, the closing bar, and you pull it down to your morning low. Okay, so like this. Okay, so at first, your first anchor point is going to be here, this low, and you could see that we had this 382 rejection. All right, so you use it from anchor to anchor on the gap. Okay, that's what I like to do. Some people use the close, like if we put the close up here, you could use that as well, but I like using the low of that last bar. Okay. All right. So there we go, guys. I hope you enjoyed the stream today. Check me out at tradingwars.com if you're interested. As always, the Golden Partnership, Fibonacci, and Automated Options Trading is a two-part book. The first part's all about fibs. The second part's all about options and fibs. This book is going to be increasing in price pretty soon. So please grab a copy if you like the fibs. You can trade with us live tomorrow. You get 1 month for free in the room. So it's a pretty sweet deal. All right. So if you would like, you can grab a copy of the book. We can trade with you tomorrow, guys. Otherwise, check me out right here, tradingwars.com in the main rooms if you just want to grab those. Otherwise, than that, guys, it's been a great start to the week. A little bit nervous. You know, in the beginning, I'm not gonna lie, I was a little bit nervous, but we were able to survive with the fibs. So I'm just thankful and grateful for the fibs, and I'm thankful and grateful for you for putting in the time here and to listening to the stream. Okay, so please, as always, go ahead and leave a comment. And we will be doing a giveaway on Sunday. So if you leave a comment, you have a chance to win a giveaway on Sunday. I'm open to taking some chart requests from the Trading Wars Army members. Do you guys have any chart requests for me? Let's take a few and then we'll wrap it up. Okay, so send me some chart requests and then we'll wrap it up right after. So let me take another sip here. What do you guys have for me? Let's look at SPY quickly. So like we talked about, right? We draw that fib from the low to the high in the last sequence. So we knew that we found support initially on the 382, but like I said, I usually don't. The 382 is not necessarily a deep enough retracement for a lot of buyers because it's not really that deep of a pullback. It's not really that deep of a deal, right? You're only getting 38% off of the highs. Whereas the 50 right here, I'm expecting a lot of reaction near the 50 and the 618 going into the rest of this week. Okay, so pay attention to these levels. I was pretty confident that we were going to come back to the 50 at some point. So here we are right now. So this is another great opportunity. Let's look at the price action tomorrow. So what do we have here? Citigroup. Is it Citigroup? Is that the one? Let me know if that's the one. We'll come back to that. SOXL. What is that? Semiconductor bull. So ETF. Okay, yeah. I mean, this is the bull one. I don't really trade these leverage ETFs anymore. I used to trade them back in the day, but now I just rather trade futures. But you know, I don't really see any technical setups here. Daily, weekly, there's no specific patterns. I'll give this one a little bit more time to potentially form this double bottom maybe setup here, and then we'll go from there. But definitely not forcing anything there. Microsoft. Oh, I didn't know Microsoft was bleeding that heavily today. Did not look at that, but yeah, pretty significant gap down with Microsoft and into the close. We're sitting on a fib right now for sure. We blew through the 618 a little bit here. That's a little bit concerning for Microsoft. Generally, you see some kind of bull step in here. So let's watch the next level here, the 786. This will be a great opportunity for a nice risk to reward trade. That would be really, really nice right there. So keep an eye on the 786. MU, beautiful outside bar here. This is a nice play we can look at tomorrow. Just taking the break above or below. Very nice. All right, last one here, C. Yeah, so we have that big inverted hammer here. Earnings is around the corner, so just be careful with this 14th of April, right? So, you know, anything going into earnings is a gamble, so you just be careful. I wouldn't be taking any new plays going into earnings just because you never know what could happen. So there's a lot of earnings on the horizon, so we just have to be careful. Let's do one more for Angie. Walmart. Is that a new all-time high for Walmart? Yep. So we got a new all-time high for Walmart, and then we sold off. No, actually, it was on Friday, new all-time high. And then today was a continuation of that sell-off. Yeah. So, you know, just right here, Walmart's kind of following the broader market. So just have to be patient here and look for a setup, an inside and outside bar, something that we can trade off of. But definitely don't want to chase at the highs. All right. All right. there we go. I am done. Please go ahead and leave a comment for a chance to win a giveaway. Thank you very much, my friends. Let's keep this momentum going, and I will try to, keep making profits for the rest of the week. All right. Don't forget to sign up for the book, and I'll see you on the other side. Take care.